comes down to computers communicating.
The information superhighway can be a confusing mix of on-ramps and off-ramps.
Bitcoin is worthless artificial gold.
Is it still rat poison?
Probably rat poison squared.
We need to get into the world of, okay, this is actually foundational technology.
What the Internet of Money does is it creates a single network which can do a microtransaction to a gigatransaction.
The Internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash.
All righty, gentlemen. Welcome back to another episode of Final Settlement. Today is Monday, June 16th. How are we doing, gentlemen? A little bit of volatility in these markets the past few days.
I think we called it a few weeks ago. We're just going to be long volatility for a while now.
Long chaos, long chaos. Yeah, so I'm going to pull up just the price chart here momentarily so we can take a look about, around what happened last week as some geopolitical turmoil kicked off at the end of last week, prompting Bitcoin to slide a bit all the way down to around 103. And, we've seen this story before. We've seen Bitcoin react in a volatile manner to geopolitical events, whether it's war, sanctions, COVID back in the day. But typically, Bitcoin recovers faster than other assets. So you can see we're already back over 107. And I'm going to pull up a chart from BlackRock as well, which shows some of this data. But as I'm pulling that up, any thoughts on the events of last week and how Bitcoin reacted, just being a 24/7, 365 market? I think when things really started kicking off, it was maybe 8 or 9 p.m. in the evening. So the rest of the markets were closed, and people react and express their views via Bitcoin typically.
Yeah, I mean, it seems pretty resilient. I think the old adage that goes that, all news any news in a bear market, doesn't matter positive or negative, you're going to still see that trend downwards. And the same thing in a bull market. If you get negative news, you're going to, it doesn't really impact it materially. And it's pretty wild because I think this most recent escalation is probably the most serious given what's happening and a lot of the additional things that have come out since the first attacks. And it's pretty crazy to see it the resilience sitting at 107K this morning. So those are the initial thoughts.
It didn't even really drop that far in context, sort of in respect to some of these past events on the table here. I think it was at like 108, went down to 103. Like that's not, in the context of Bitcoin's volatility, that's not that aggressive of a move. But yeah, to your point, already sort of rebounded. But this is a great chart from BlackRock. I think we're going to update this. One, it needs to have this data for Liberation Day and now this latest geopolitical event. But this is just a good sort of tracker to look 10 and 60 days out after these types of events and how well Bitcoin performs relative to equities and gold. And we can probably add a few other asset classes to this as well and make it more comprehensive.
Yeah. Bitcoin's the most liquid out of all of those, especially trading on the weekend. So I think if you're a macro event driven trading firm, like adding Bitcoin is just like necessary in order to, be able to express your views faster than anything else, just given how quickly the world is ultimately moving in the flow of news. It's just a good thing to have in your portfolio in order to be able to express your views. It's seeming like more and more of these attacks, especially maybe it's just the timing of them because they're overseas and in a different part of the world, but they always seem to happen whenever the markets are closed here in the US. And so, obviously Bitcoin's going to sell off, but no other markets are open because you sell what you can, not when these things kind of happen. And so, Bitcoin will recover when there inevitably is a little bit more liquidity that comes back into the situation. I think that I'm not a geopolitical expert on this conflict, but we'll see what happens. Yeah.
I think what's kind of bullish is, I mean, just bullish for the price is that it is going to sound crazy, but like what happened was kind of priced in already in the sense of this whole notion of going to a multipolar world from a unipolar world and trade starting to break down, and the dollar breaking down from the reserve currency, and how efficient commerce globally is going to like happen in the future. I think that's where this gold pump and then Bitcoin's natural pump and the understanding of sovereigns starting to accumulate. And so I think that's where we see this like price. It's like, well, if the world is heading to a chaotic place and volatility is going to ensue, counterparty risk is going to ensue, and you don't know who you can trust, and you have to settle in neutral currencies. Well, why would Bitcoin go down if this is already understood by enough sovereigns and enough individuals? And so I think this is where it ties into, a little bit of Saylor's, I forget what quote or tweet. I actually listened to it a few times, and it's interesting because last week, I guess he came out talking about like bear markets and the price, will like go to 1 million. And then it sounded like initially, I think what people quoted that it's going to go back to 200K, but he was referencing it's going to dip 200K if you listen to it carefully. So it's saying like it's only going to dip 20%. And I think that's kind of the sentiment and the theme we've been talking about is there's just like a different structure of what's happening. It's understood now. And I think this last part, I know we're going to talk about it later. I think probably, and I know I'll get a lot of shit for this, but like stablecoins are probably the most bullish thing for Bitcoin by far, because of just the liquidity that comes into the system, and then just the natural market knowledge that people will know that a unit's digitized, especially when you think about like Amazon, Walmart, and all these other people getting in, because they buy trust, and people have trust in these large firms. They don't have trust with a Kraken or a Gemini, and then maybe a little bit with a Coinbase. But like when you already interact with them and you already have your linking of dollar, like it just changes the whole dynamic around all of this. And I don't think we fully appreciate it yet.
I think that's a great point. In just the sense that it normalizes this entire industry to an extent, right? Like, and it's the perfect sort of gateway drug to going down the path and understanding Bitcoin and sound money. It's like, well, if you can trust these digital dollars that are running on quote unquote crypto rails, it just becomes much more normalized in the sort of public zeitgeist that, Bitcoin's a real thing. It's here to stay. We're going to use digital dollars as well. And so, yeah, I totally agree that is sort of underappreciated right now. But maybe with that, we can jump into some deals of the week. Lots of deals, lots of news items. I'm just going to pull up the Early Riders Open Range newsletter from Sunday, and then we can jump into any of the things here. We had Stripe agreeing to acquire crypto wallet infrastructure provider Privy, undisclosed price. Coinbase unveiled their Coinbase One card, promising 4% Bitcoin back on every purchase. Now, there's some fine print on that one. Basically, you can only get the full 4% if you're holding all your assets on Coinbase, I think is the stipulation. And then it scales back to, I think, 2% if you're not holding your assets on Coinbase. But still a pretty compelling product. I think Gemini was first to market with a similar credit card offering Bitcoin rewards a few months ago, but would expect to see more of these types of products. People want to earn Bitcoin, and they're already spending a lot on credit cards and on credit in general. So it just makes sense. There's a lot of product market fit there. Coinbase also confirmed plans to introduce perpetual futures markets for U.S. traders. That's been something that they've wanted to do for a long time, but there was always sort of regulatory pushback on perps, and that's why they sort of predominantly existed offshore. Binance is sort of the main hub for those historically, as well as some sort of DEXs, decentralized platforms that allow people to access perps.
Can we should we touch
pick
on
anything?
a few? Yeah, I think two initial comments on the Coinbase one. I think this was always going to happen, and I think I've had this sentiment for a while now that the existing Bitcoin companies that focus on these sectors, when the big boys finally came in here, were just going to completely crush market share and opportunity. Coinbase is a great example of their distribution, and then American Express being a blue chip. But not only that, from the cohort, if you think about it, the traditional person that's stacking sats with some of these like cards in the first 10 years of Bitcoin's history are some of the segments you just naturally don't want. Very price averse. They're not really, spending a lot. They're not going in debt. They're holding BTC. And so American Express has that, like, from a cohort unit economics, and then Coinbase. And it's actually a really interesting honeypot, or not honeypot, I'd say like monkey's paw, to get them to hold assets there, because you just basically vertically integrate that. I'll pause there. Curious your thoughts before, and then we could talk about the Privy deal, because I think that's super interesting as well.
Yeah, Coinbase has packaged this in a very nice way. It's just like the card looks great, honestly, and most people are just going to use Coinbase because they have a good user interface, and so it just makes a ton of sense. Yeah,
but 4% is amazing when you hear it. Like it's great marketing because it is 2%, but you have to read into the fine print, and people just are like, screw it, 4, 2, whatever. I'm in.
Yeah, you also have to pay some sort of annual fee, to my understanding, and so like that's inside of what actually you get back. But have you guys really looked into the why it's holding 2% versus 4% on Coinbase? I haven't been able to dig in there yet.
Well,
I think it's just to get some amount of lock in to keep assets on the platform. That would be the thought.
Well, yeah, because the idea is it's like I didn't look exactly, but basically there's a delta in that 2% spread that they pass back, that they're either they've run the numbers, or the bet is that they will getting close to those assets, holding like stablecoins, crypto, or BTC. You're going to trade it more. You're going to take loans out, and so you're effectively it's similar to like JP Morgan Chase. If you're going to give you a checking, you're going to give a credit card. You're going to monetize a relationship in multiple ways. Is, I believe, the core angle there.
Yeah, and then there was also this from Coinbase that Shopify will enable USDC stablecoins on Base, which is Coinbase's Ethereum L2, in checkout and Shopify payments and Shop Pay. So again, just more sort of integration of stablecoins into the traditional economy, normalizing these things. And then what was the other one we wanted to go to?
Well,
the previous.
so
yeah,
so maybe we could stay here, because I think this is a real good example. Again, going back to the credit card opportunity, is that we haven't historically seen not only big players in traditional tech think about their network effects and distribution come into the digital asset space. So I think this is why this is bullish BTC. I think it's also bullish opportunities, because we naturally know, whether it's the Van Ex and Fidelities of the world, they're focused on Solana ETFs. And while they have a Bitcoin focus, it's just that you naturally know, when building a business, if you don't have a singular focus, i.e. Coinbase, you're going to miss a lot of things. And there's opportunity costs. And similar here, I think it's directionally the right move. And it's interesting that Shopify previously had purchased Shop. I think it's shop.com. And so Shop was an application that you could download. A lot of D2C consumers used it, or D2C like sellers, merchants used it. And so you can basically aggregate all of your the things you were purchasing, and then you could see it, and you could go back in to see when they were shipping, and you could buy more. And so if you transition to the Privy news, it's interesting because it looks like Stripe is doing a similar play, where Stripe initially acquired the distribution mechanism for stablecoins with Bridge, and then they just recently purchased this wallet provider, Privy, which my understanding is they have infrastructure for other wallets to build in stablecoins and crypto assets. So you can see how they can build that kind of like full loop, where they can give other merchants the ability to embed digital wallets or stablecoins into their merchant application, and then pay through Stripe invoices backwards and forwards, and they have it in a singular app. So they may even launch their own app, as well as give this infrastructure to others. And so it's just a really interesting, the Collison brothers are super savvy in looking at it from an angle of just like, their R&D in this stuff. I think they've been working on this for years now. It's not like they went and hired McKinsey to do a study on what stablecoins are and then are trying to figure it out. It's like they've already like mapped out the flow of funds. And so anyway, long story short, I think this is super fascinating. I think it's going to be a large distribution mechanism, but I still think the missing piece, as we know, is the Bitcoin component and allowing people to go between stables, Bitcoin, and how they're going to naturally manage capital, especially when a lot of these merchants are going to start to realize, if we all have realized, that we want to accept Bitcoin. And that's where there's opportunities to invest in the space, is to create the right infrastructure. That I do think stablecoins are going to be a big part, but also you're going to naturally want Bitcoin next to it.
Yeah, no, I totally agree. And the point you made around sort of the timing or the timelines of all of this, in the sense that, you know, a lot of these more traditional tech companies have been around the hoop and thinking about these types of things for a while. I think it just speaks to the stark difference in regulatory environment. As you know, the Trump administration came in, was very favorable, and so now, you know, they have air cover to do all these things, and everyone's sort of getting their chips on the table. You know, the Stablecoin Act looks like it's going to go through, and so now they kind of have that air cover to do all of these things that they've probably been thinking about for multiple years. To your point.
100%. And it's interesting to see on the Coinbase side too. They had their State of the Crypto Summit, and they mentioned, you know, Bitcoin 62 times. They mentioned Ethereum and Solana once or twice, but it was mostly, you know, they mentioned crypto a lot, but a lot of it was just their USDC, obviously with the IPO, and you know, just mostly talk about stable coins, etc., which seemingly is the shift in the focus of, you know, both Coinbase, given the you know, Bitcoin dominance chart that we're continuing to see, as well as, you know, what merchants are actually adopting. And maybe that's just because it was more of an institutional crowd there as well. But it's interesting to see, you know, a little bit more of a pivot away from, you know, the other tokens that, you know, retail traders have been focused on in the past, to a little bit more coming back to Bitcoin, as well as stable coins as well.
Yeah, that is super interesting. They only mentioned Ethereum and Solana one time each. But I guess that kind of makes sense. Like I would imagine I didn't watch this summit at all, but I would imagine the focus was really on stable coins and you know, their new card, which is related to Bitcoin. So that kind of adds up.
These poor ETH guys, man.
These
Yeah,
these poor Cardano guys. Do we want to go there? Cardano is planning to buy Bitcoin.
Before going to the Cardano thing, I think one thing you keyed in on is that, like, can't be, you know, has to be underscored, is around the regulation. I think we see this with RIAs and banks, that there were the forward-thinking ones that had been R&Ding for the past couple of years, and now they've gotten the green light. But I think that also ties into, you know, the most connected individuals are some of the largest companies in the world, and Walmart, Amazon, and I forgot whoever else were the larger ones looking at stable coins. It makes complete sense that they would get involved, but also from a distribution perspective, I think it's probably understood that they're not going to be net new stablecoin issuers, like from an emergent one, unless you're kind of tied into whatever Anduril's doing, because it's like a proxy CBDC or whatever. But from a Walmart or an Amazon or a Fidelity, it makes a lot of sense because of your distribution and also your brand and trust. Because I think that's a thing that we still forget. Like, all these digital assets are super scary, and they're, you know, well, what do I do with them? And do I self custody the stable coins? And what happens if somebody steals my wallet? Like, all these things. But you can start to invest insurance and just a lot of market structure that hadn't historically been there by a startup that will let people get comfortable with these tokens, especially if you already have, like, think about your Amazon Prime application and it's already there and it just gets converted and then it's interoperable. Like, it's going to get really interesting to see where this goes. But I still can't, I don't see it yet, but I can't help but feel like whoever figures out the swapping of BTC and also the opportunity around Bitcoin is going to really reap the rewards. And yeah, I wonder if, like, one of the user experiences is just letting individuals buy for you have like toggles where you can let somebody buy for less than market price if they switch for Bitcoin, because you're ultimately taking less, because all these, you know, USDC coins are still going to have to pay some kind of interchange fee. And so if you're able to do it via Lightning, not have the interchange, plus you don't have to buy the, you know, if you're going to convert to buy the BTC, that's another fee. And you start to stack that, and Bitcoin does its thing while these dollars do the opposite. Like, that's going to be a very interesting dynamic for companies that be able to pull data and show the appreciation by just holding the Bitcoin. So it's going to be fascinating to see who kind of plays and does something like that.
Yeah,
And
that definitely seems to be the trajectory, and like I would even say the Coinbase One card is a step in that direction, right? like if you are the implication there is explicitly you're spending in dollars, and you're saving in Bitcoin, whatever that 4%, 2 to 4% is. The implication is that that's what you're stacking, that's what you're aiming to save while you spend your dollars or your credit.
100%. And the other factor too is just with the constant devaluation of the dollar, all of these firms, whether it's Amazon, Walmart, whoever, they essentially are forced to become financial services firms too, of just like, figuring out how to outperform, the dollar because it's continually devaluating. And whether that's, just managing the significant costs that are associated with spending at terminals and online to just actually saving in the best form of money. I think there's just going to be more and more interchange in between the two, and so we're going to only see that ramp up. And I think it's actually going to be really investigated by these large firms too as they go down the stablecoin path a little bit more. They're just going to inevitably learn more about Bitcoin and why and how all these digital assets work.
Yeah, it'll be interesting to see when the market starts to push or leave the rewards programs. Like we know how bad Starbucks is, right? And the float that they're able, and then like I think they even just had this form of inflation like 6 or 12 months ago where they just like cut out the conversion cost or price. But where people just stop going there because you offer Bitcoin rewards. It's just so it'll be interesting.
Yeah, I'm really looking forward to seeing airlines do that as well.
So I mentioned this, and we've talked a lot about the Bitcoin Treasury strategies over the past several months, and it seems like every week there's 5 to 10 new announcements of some company implementing a Bitcoin Treasury strategy. This is a bit of a different flavor. Cardano is now proposing to convert some of their ADA coin into Bitcoin and stablecoins. So is this just a continuation of this crowded trade of corporates and now crypto entities acquiring Bitcoin? I mean, we saw some of this, like if you think back to 21 with Terra Luna, it does remind me of that when Do Kwon decided to buy Bitcoin for their treasury. Now that was a little bit more overtly a scam, but Cardano has sort of just been languishing for years, and Charles Hoskinson, who's on the screen now, is arguably one of the greatest crypto scammers of all time. And so now he is also Bitcoin affinity scamming to some extent. Any thoughts?
Yeah, I think that this is not necessarily something new. I mean, EOS did it very well back in 2017 of just, buying or selling a bunch of their token in order to buy Bitcoin. People have been doing this on their personal treasury for longer than since 2017 as well. I think a lot of these crypto people just inevitably price everything in Bitcoin, whether they admit it to, their community or not. And so they want more Bitcoin. And so inevitably, everybody is going to sell non-core assets, whether it's ADA or anything else, in order to acquire more Bitcoin in the long term. It should be the hurdle rate for every asset class, asset manager, whether personally or as a company. And so, we're just going to continue to see this both from ADA as well as, pretty much everyone else that there is.
Yeah, I mean, it kind of reminds me of anybody that's like looked into Ethereum, tokenomics or whatever. There's always like these unnatural mechanisms to lock up Ethereum to create this like false sense of scarcity. There was like MakerDAO. There was naturally like the pre-mine and what individuals like that were doing holding it. It was kind of like baked into the underlying, right? Like it was always trying to get you to lock up the float. And this just sounds like a different like flavor of that is we're gonna hold Bitcoin. We're gonna hold Bitcoin, let the price appreciate, and we're gonna buy more Cardano and just like take it off the market. And then naturally, the sad part is retail comes in, they see a price move, and they say, "Well, that looks like it has more opportunity than BTC," and they come in, and there's just like this is basically the same game that's been happening for a very long time. So yeah, I mean, it makes sense. Like, there's no narrative for Cardano. Like, so if they can have the price
Right.
10x or whatever because they're buying
Right.
it off because they have Bitcoin.
Rational move from their perspective, if we're being fair about it.
It sounds like a Bitcoin Treasury company. Like, it doesn't. It's
yeah. In other shitcoin news, we've got some movement on the Solana ETF front. Maybe Bitcoin dominance is going to come down. Michael, what do you think?
Yeah, I'm trying to think, how do we tie this so it's not it's not a crypto show, and how where does this is this relevant, or how is it relevant for Bitcoin? But yeah, no, I mean, I don't know. Like, there's going to be a bunch of ETFs. I think at the end of the day, the market realized the Trump administration, the powers that be, they're going to make a bunch of fees from all of this stuff. And so there's going to be more ETFs. There's going to be more ETFs with leverage in Solana and whatever staking that's going to allow to get some yield. And the Bitwises and folks of the world are going to sell RAs that you can get passive income on this, and they love passive income. And so, yeah, I think like we're just going to see more of all of it. I think the thing that, yeah.
I mean, the one other thing, Brian, can you pull up the Gemini chart?
Yeah.
That is, what I see as, the real Bitcoin dominance here. I think we may or may not see all these Bitcoin treasury companies become larger than the other altcoins like the Ethereum. I wouldn't be surprised if MicroStrategy is bigger than Ethereum later this cycle. But yeah, I mean, this is a chart that just for the listeners, over 30% of Bitcoin circulating supply is now held by just 216 centralized entities, which are primarily made up of exchanges, funds, DeFi smart contracts, public companies, private companies, and governments. And given the demand for Bitcoin treasury companies, I think that's only going to increase. And it's just not a great trend to see. I think that this is really the new Bitcoin dominance. It's just, people holding it themselves versus, just on a centralized exchange or within some sort of wrapper, whether it's, Bitcoin treasury companies or these the governments will continue to be acquiring a little bit more as well.
Yeah, there's two key things to talk about. I'm glad you brought this up. One is ultimately the best analogy I can think of. There's probably others. We should riff on them week after week on what are better ones. But I think of like pre-2000 bubble, and Bezos probably sat around, and people that sat around, like I think it could be Bezos or Google, but like the people that were close to those investments understood what was happening and understood the build out. And then they saw the pets.com and they saw all these other things. And they're like, that's funny. And there's money. There's a reason why money's flowing there. There's a lot of money in the system. But there's no real signal. And I think about everything we're talking about here today and like the ETFs and the different things that people are going to chase. And it's very similar that at the end of the day, anybody listening to this, and we know that there's only 21 million of these things. And, Peter Thiel quote, if you want to make money, get closest to the money. You want to get closest to the BTC, whether it's like the payment rails or the underlying custodial infrastructure. And in the future, if you do that, you give yourself a really great chance to participate in the financial economy for the next hundreds of thousands of years. Everything else is basically noise, and it's noise because there's so much money in this system. So nobody has any idea. So we chase the shiny star, like the shiny objects, and we talk about them, and it's good because it's a canary in the coal mine of the sentiment of the market and where it's going and the maturation, and that people are going to naturally, this is a gateway into them saying, oh, it was Bitcoin the whole time. And that's kind of where we focus. It's like, well, what's the step function for individuals and other businesses to start creating infrastructure that is ahead of it? So when the market, the next cycle wakes up, it's like, oh, it was Bitcoin the whole time. And the key thing I'll call out, because a lot of people, it's not obvious until you hear it, but a lot of these crypto firms have no Bitcoin. Like maybe they don't hold it on their treasury, and they definitely aren't able to really absorb a lot of BTC capital because there's only so much floating around hedge funds and custodians of like these ETFs, and it all sits at Coinbase. So all these crypto firms just have to go further and further on the risk curve. They have to have more and more financial products to raise money. And similar to all these ETFs that come about from Bitwise and others, it's just like Bitwise, I think if you back into what they paid OpenSats for the grant, it was like they made like $1 million in revenue or something crazy for their ETF last year, net of fees. And these people just don't make any money around Bitcoin because they don't have any fundamental differentiation in the Bitcoin product outside of Coinbase. And so I think there's just it's just basically calling out like there's a very large opportunity, but a lot of these larger firms are going to miss it because they're chasing stable coins and crypto, and they'll look back and they'll be like, oh shit, how do we do it? And that's really the real opportunity is.
Hey everyone, thanks again for tuning in to another episode of Final Settlement. We had a lively conversation this morning discussing all things Bitcoin corporate treasury strategies, with another one launching this morning, as well as just topical things happening in the markets, from the tariff deals by Trump to the strategies across different corporates and finances bringing in financial institutions, bringing in Bitcoin and digital assets into the fray. Quick word from Onramp. We last week, if you were paying attention, launched Onramp Trade, which is the on-ramp to on-ramp. It's the ability for listeners that may not be ready to start leveraging multi-institution, but want access to our best-in-class research, financial services, and team. They can now sign up for Onramp Trade and get no-cost trading all the way until October. As well, for those individuals, anybody in their friends and family network that they've been looking for a Bitcoin-only solution to buy Bitcoin at some of the lowest costs in the industry, and that they feel comfortable and get that peace of mind that they're going to be taken care of as they purchase more Bitcoin, they can seamlessly transition to multi-institution custody. You can reach out to us at hello@onrampbitcoin.com or onrampbitcoin.com to sign up for Onramp Trade. It takes about 1 to 2 minutes to get fully onboarded and start buying Bitcoin, all the way to something that we also released last week, which is self-service onboarding. So for any individuals that have been listening to these podcasts and wanting to now feel the power under the hood of multi-institution custody, you can go to onrampbitcoin.com, sign up, and then set up a standard or private account. We'd love to work with you. If you have any questions, we have an updated FAQ page, but you can also just reach out to hello@onrampbitcoin.com or michael@onrampbitcoin.com, and we'll get you in touch with the right individual. Hope you enjoy the show, and please, if you don't forget to like and subscribe, it goes a long way in helping to get this content in front of more individuals. Talk to you later.
Yeah. One thing I've been thinking about, curious to get your guys' thoughts, is as this sort of Bitcoin treasury company trade continues to play out, like one thing I've been thinking about is consolidation. So like if MicroStrategy would ever buy up smaller Bitcoin treasury strategies, if they're trading at an MNAV of 1 or less, and then even more interestingly, like if you think about 5-10 years from now, and a Google or Apple or even a sovereign government wants to acquire a lot of Bitcoin, the best way to do it might be to acquire a Bitcoin treasury company, so that you're not, just buying on market, 50,000 to 100,000 Bitcoin. If you can just buy a corporate entity that holds Bitcoin. Curious how you think that plays out in terms of just consolidation, and then these vehicles being basically a quasi form of like OTC deal for someone to acquire a large amount of Bitcoin.
I mean, the first part is, it kind of goes into how I've thought about the early rider stuff, is at a certain point, a company that generates profits in Bitcoin doesn't sell for anything other than Bitcoin. Because why would you sell for dollars? Like if you're already making the Bitcoin, you're the Bitcoin printer. And so you're going to convert it either way. So I think that naturally applies on my first listen of like, if you already hold 85 billion in BTC and you expect it to be whatever, so what's the multiple you're going to sell it for? So you're probably going to have to buy it for much more than the Bitcoin, not less, especially if you already have like accumulated that, because you're probably going to do the analysis of like, well, what would it cost me to go do that? It's not the spot price, it's whatever the reflexivity. That's my thought on there. What I think, like on this whole treasury thing, I think we're like at a race. It makes complete sense. I've had a lot of time to think about like the state of like inside money and outside money, and there's a lot of black money that's like exited. It's not a shock. Without getting conspiratorial, like in 1999, I think, or 2000, there was like $2 trillion, 2.3 trillion that was publicly missing. And now I think there's like 20 trillion, and we have, wars and all this stuff. And it's like money just goes. It just goes, and where it goes, it's a topic for an offline podcast. But point being is, it makes complete sense that like if you could take delivery of this, you can be self-sovereign, you can figure out how to like leverage multi-institution, you can do all these different things, or you can corral the capital into the capital markets and consolidate it with one custodian. This was going to naturally proliferate and it was going to be encouraged because it just keeps everything nice and tidy. And so I think it's going to be a race, kind of a convergence of like if these can stay up long enough to accumulate more and more BTC. And then what happens if people like something bad happens and they kind of deleverage because people wake up and then they realize it, or if they can continue to accumulate more. It's going to be very interesting because we're only at 107,000 and it's already like we're seeing this concentration and it's only going to increase. The optimistic view is that like everyone that gets some kind of exposure to this asset class, they naturally have to understand it because it's their money and that's what people have to do with their money is understand it. So if somebody bought, they're worth, let's just say 100K and they bought $1,000 of, at Metaplanet and then now it's 50,000 or it's 50% of their net worth. Well, that wouldn't be, it's illogical to be like, they wouldn't understand why it went up. Right? They go do some diligence. Like what is Metaplanet buying? And then like, what is this thing? And it's like, oh, I can own it. And then like you start to see counterparty risk and you see like different states and sovereigns fail and you see them get bombed and you see all these things and then maybe it gets seized and you're like, oh, maybe I want the underlying. So that's like, I think the positive case that people will wake up before there's too much, but I do see like how there could be an event horizon where there's like too much concentration and I don't know if it's an existential problem, but there is a very big problem there. And what's scary is that it's very easy for people to buy this in a brokerage because that's how their mental models of the world is. So yeah, like the concentration's real.
Yeah, I think that even if MNAV goes below 1, I think many of these companies will be slow to be accepting that they're willing to sell at those prices because they're going to be like, okay, well, I acquired this much Bitcoin over the past 12 months, 24 months, whatever it may be. And I could do that again once MNAV eventually goes above 1. We'll see if that ends up happening or not. But the other aspect of as well is, there is a new letter out about CTV and CSFS, potential soft fork that they're looking to implement in the next 6 months. We don't need to go deep into it now, but that's going to be another factor that shareholders will need to consider when making investments into these companies because a lot of these Bitcoin treasury companies do already have a substantial amount of Bitcoin. And, you're going to want to be aligned with whatever their view of their protocol is over the next near term as well as long term. And just like understand that, ultimately the entities that are running the nodes will have the decision of which way they want the protocol to go in the long term, which is, the centralization risk here with, 216 entities having about 30% of the supply.
Yeah, and I would posit that the vast majority of people investing in Bitcoin treasury companies have no idea how soft forks work.
Yeah, 100%. If they're going to want to, it's like invest then investigate, which is later on they're going to realize that, oh, hey, these things are actually very important to the underlying protocol as well as, even if you only want to stay in MicroStrategy forever, soft forks and any protocol changes will inevitably impact your investment in the company as well.
Yeah, no, that's a good point.
What do we want to transition to a few of the public markets stuff? I think it came out that 1T, Dan Tapiero's, I think, parent company, or I think it's 1T unless
10T.
It's 10T, but I feel like it's SPAC 1RT acquisition files for $150 million IPO. I believe Pomp is running a $750 million SPAC. It wasn't clear initially, but I guess now it's to buy Bitcoin if I'm correct. And then Bullish and Gemini both, I think confidentially, are going to be filing for IPOs. Just curious your guys' take on any of that.
Yeah, I mean, it's the trend. You find a SPAC, you get a blank check company, you buy Bitcoin. That is the trade right now. So expect to see more of this.
Yeah, definitely not seeing the end of it for right now. With Gemini, there's just so much demand for actual operating companies as well, and so I don't think any of their financials are public, or I haven't seen much floating around on that yet. But it would be interesting to see if they're going to, go the Coinbase strategy of owning a little bit of Bitcoin and just running their operating company, or if they're going to, just be looking to play the Bitcoin Treasury game on a larger scale. But I think that more than that, you're just going to see a ton of M&A of, Privy, I'd never heard of prior to the Stripe acquisition. And I think that right now the market is about as frothy as it can be when it comes to acquiring other, crypto infrastructure providers.
Oh, be careful there. It is definitely not as frothy as it could be. We are like, I think maybe second inning of froth. But I hear you. I think there's two really positive takes for Bitcoin in this. One is naturally when like companies IPO, early founders or operators get liquidity, and then they generally reinvest it into the market, whether it's venture or building businesses. And I think a lot of these companies, these people aren't dumb, and they're going to get liquidity on their shares, and they're going to be that's going to be a natural demand for Bitcoin because they just had years to do the work. But the other side of it is I think like we have to re-anchor, because there's a lot of noise out here and a lot of shiny objects, that Bitcoin just is the best tool, right? Like it's the best tool from an interoperability perspective. It's the best tool from a censorship perspective, or not censorship resistant, best tool from finite scarcity. And so over time, if that's true, then the market naturally will adopt it and it'll infuse it in all its products and services. And so these individuals, some of them will come out really understanding that, and they'll build some of these world-class businesses, and they'll understand scale that historically hasn't been there. So again, it's a huge opportunity. I think of when we see these things, there's like this notion of cloning. You want to look at what works and then just like slightly iterate it to make it work on your benefit and add additional features. And so, yeah, this is another one, I guess. Justin Sun going public. This is like the perfect sign of I don't even know. It's not nepotism, but whatever the political version of nepotism would be. Justin Sun, I think it came out that he wasn't going to get investigated. I think it was the SEC, or maybe it was the DOJ. That got paused, and now he's going public here. His shares will probably command a pretty high multiple, and some of those funds will go back into the administration. This is just how things have always worked, and so you can kind of see this happen in real time because we're following this industry.
Yeah, and Eric Trump expected to join the new leadership team of Tron Inc. If you had that on your bingo card for this cycle, congratulations.
Can we find out in real time if Saylor really is joining Pakistan's board of advisors?
I will pull it up. We can look in the comments. I think people were questioning this. So just for those unaware, there was a headline this morning that Saylor was appointed the official Bitcoin advisor to the government of Pakistan. It sounds like representatives of the Crypto Council of Pakistan are denying the report. So I'm going to go ahead and say this is probably not real, but wouldn't surprise me at this point. Yeah, no one seems to know.
There was another interesting capital raise. It caught my eye because we had launched around the same time, and they just recently raised like about $30 million. It was a firm called Turnkey, and it's with a Q. I don't fully understand their model, but my base understanding is that they're infrastructure for companies and wallets, but they kind of obfuscate private keys. So they're able to just think of a lot of, I don't want to say sophisticated because it's not the best word, but they create other ways to let people manage like crypto assets and stable coins without having to write down C phrases and mnemonic phrases. And one take would be that that's what's needed in market structure is like, people don't want to know and write down these things. I don't know if I would go in that direction because I do think that there's something very valuable. I think it came out this past week. I don't know if it was the SEC that came publicly said, private keys and self-custody is a sovereign right of U.S. citizens. And so similar to gold, and what makes a system work is you do need the ability to self-custody, and you do need the ability to always take delivery of your capital. So I think obfuscating that is the wrong move. That's where I think, like, having been in the space for a while and building, collaborative custody, a multi-institution, I don't think it's fair for the end user just to like say, don't worry about it, because you actually add more complexity when you have to recover this stuff. And there's a lot of lock-in and requirements. And so like, that's one angle. I think the other angle that we kind of take is, well, you push it out to the edges, to the financial institutions that have the regulatory bodies and the capabilities around institutional, key generation ceremonies, and then you don't trust a single one. So it's going to be interesting to see how this plays out, because the problem with like things like turnkey, I should look more into it. But the reality is, most of the time, any of these like quote unquote sophisticated things actually add more complexity, and complexity is the enemy of security. And so they probably work when you're trading around and whipping tens of thousands of dollars, but when you're thinking about hundreds of thousands or millions of dollars, it's not something you want additional complexity in your kind of like custody format.
Yeah, is this the deal? I've never heard of this company.
Yeah,
Raised
they
30
actually
million.
I'm pretty sure they spelled it wrong on this. I think it's TURNQEY, I think.
Maybe a slight pivot towards some macro data. Liam, you shared this one in the chat. Just unemployment rates. I'll pull this up for recent graduates versus other groups. Thoughts on this?
Yeah, this one was really interesting to me. So this is for those listening, recent college graduates aged 22 to 27, all college graduates, young workers aged 22 to 27, and all workers. So recent college graduates age 22 to 27 has historically been below all workers. They just are more demanded for work just because of their credentials and what they've done in the past. While young workers aged 22 to 27 have just been slightly less demanded, without a college degree. What we've seen recently is that now young workers recent college graduates between 22 and 27 have actually ticked up above the line of all workers, which is, meaning that there's less demand for recent college graduates than there has been historically. And I think that's kind of a factor of two things. One is, it can be some macro data in there of just like companies being slower to hire, but I think it's also just, happened around 2022, which was, the invention of ChatGPT and when all these AI tools started to get more efficient. And so a lot of these companies are very slow to lay off existing workers, but they will replace jobs before they actually have to hire them, just because they're better and more efficient tools. And anything that goes from, making a law firm more efficient by being able to use these in order to, draft memos, create and read very dense documents faster, to everything else that's required within the workflow of pretty much any company. I think that this is something that we've talked about for a very long time, of just like the structures of organizations compressing over time. You need many fewer workers in order to, make very successful and cash flowing and companies that can be incredibly valuable over time, as well as just the structure of companies is going to flow from not having quite as many just workers all across the organization, where they can actually go out and be more of a freelancer and use these different tools in order to just create successful businesses themselves, or on a very small scale. So this is something that's really interesting to watch, and we'll continue to keep an eye on it.
I wonder, this is going to sound crazy, but I wonder, we talked about it a few times, how there's all these different convergences of AI and Bitcoin. And I wonder if this is like, the closest analogy I was thinking of when you were talking is like in prison cigarettes. And the reason I say is, like, you go to prison, right? I've never been, but you understand, like, you see in the movies where that like, all sorts of commodities start to proliferate, and like cigarettes are the thing. It's like that's the store of value because of the coincidence of wants, and that multiple people want it and they don't even have to smoke, but you like trade and you have it. And I wonder if this world of deflation and naturally like people being laid off or seeing the writing on the wall, like think if you're a middle management or at a consulting firm and you have some foresight and you only have 2 years to be commanding this 150 to 200,000 and you save like 250K. If you're naturally looking at this, unit, the cigarette that's appreciating, it starts to become understood. It's like, this is how I offset the deflationary forces that are coming for me, because maybe that person doesn't make X. They may have to start doing consulting across different, they become effectively like a mercenary and they're just hired across different things. And maybe they make half of that, but they sweep it into BTC. And so they're basically making and purchasing power the same. Like there's something there that I think similarly with businesses, right? Because if a business raised $100 million and this, the AI trend's only accelerating, you realize that your cost of, your instance or whatever you're selling to the market is going to naturally compress because of, all these tools. You start to park more of those dollars in your treasury to offset that. That feels like another really big tailwind. It's a little early, but it's something like that. It kind of like flips on a switch once it becomes understood. Because you're just like, why am I holding these other things? It's just basically like people using AI. It's like, well, if you don't use AI, you kind of already know you're done, or you don't use the internet. It's going to be similarly with Bitcoin and personal finance all the way to like corporate and business strategy.
Yeah,
that's a great point. And I think that another aspect of this as well is just like prior to even, like if you see the writing on the wall that, your position may not be needed within 2 years or so, and you continually sweep all of your own personal cash flow into Bitcoin, you're going to be able to spot the gaps in the market and have both a higher value of the asset in order to start the business, as well as, be able to go out and provide a more efficient service for yourself. And so I think Bitcoin is, giving the tools to those who really need them during this kind of changing world.
Yeah, unfortunately for these recent college grads, they might not have as much optionality to implement that strategy if they are not yet earning any income and they're searching for a job, and instead people are just using AI tools instead of hiring entry level positions. So, but agree that's for the more established business professional or middle management type person, like that is a completely rational strategy that I would be optimistic as well that people start to wake up to that reality. Go ahead.
I was gonna say before we wrap, we should just highlight the Tether stake in Elemental, the gold refinery, because I think this is a trend we've been talking about and watching closely. Gold and Bitcoin's interplay. There's a few angles to it. It just came out a few minutes ago that Trump Social or Truth Social is going to launch like a Bitcoin Ethereum ETF.
Mm-hmm.
And I think this is somewhat like adjacently related to it in the sense that, gold and Bitcoin, they're naturally scarce assets, similar underpinning thesis, but also most people don't come to Bitcoin as the best form of money, and that's the only thing they should hold. And so I think there's a natural version of gold and Bitcoin products coming to market. And what does that look like in those rails? And it's not, if you want to be positively skewed, it's not Ethereum and Bitcoin. It's probably more gold and Bitcoin. And so Tether, holding, I think 50 tons of gold. Such an insane number. I think it's 50 tons. That they're making this bet, and so it's interesting to see kind of like the different bets in the scarce assets Tether's making across gold, Bitcoin, and then land as well.
Yeah, and one other thing that they've done as well is go into private investments as well. And so this is something that Darius Dale has kind of pointed out, and he's done a good job of this, of just removing the 60-40 from your portfolio and replacing it with 60-30-10 of 60% equities, 30% gold, 10% Bitcoin. Of just if we want to see more of an uncorrelated portfolio, which many people do, just because they're risk averse and want to be downside protected, it makes more sense to have apolitical assets that are relatively scarce, like gold and Bitcoin. And so, this is just something that I think we're going to see more of as bonds continue to underperform in the traditional portfolio.
Yeah, along those lines, this was a chart that I found that sort of speaks to that transition beginning to occur. Just in that the sort of traditional pension fund allocation, equities relative to bonds are at all-time highs. So I think people are waking up to negative real returns of their bond portfolios and realizing that, I guess the first order is just increase your equity allocation. But then the next step beyond that is adding some scarce assets, whether it's gold, Bitcoin, or a combination of the two. And similar to that Tether deal, Cantor had an announcement a few weeks ago around a gold Bitcoin product. So I think we're just scratching the surface of what that interplay and various financial products built around those two assets in particular will look like in the coming years. One other thing I just wanted to share, and then we can wrap unless you guys have anything else, was while we're just looking at government data, this was an interesting chart around CPI methodology. As we know, CPI methodology sort of consistently changes over time in terms of the inputs, the basket of goods that's being measured. And this chart is showing use of alternative estimation methodology in CPI has spiked pretty materially in the past few quarters or months. And so this is just a reminder to always look at CPI data and other government issued data with a massive grain of salt, and understand that inflation is in reality far worse than whatever CPI is reported as, and probably likely to accelerate going forward. We saw oil begin to spike last week as sort of turmoil in the Middle East re-escalated. So just something to keep an eye on as well.
Yeah, we have to jump to go to a call, but we don't have to pull it up, but this reminds me of Parker's tweet from last week. For I think 4 or 5 years, he's been just doing going into Whole Foods and looking what a dry age ribeye costs, and it's pretty crazy when you go back. It's like similar to when you go look at a receipt from, I think one came out like 30 years ago that was showing what like hot dog buns cost. It's like 17 cents, something crazy. It's just bread, right, in a plastic bag. But point being is the gaslighting around inflation is real. And my favorite part of that Parker tweet is there's the natural like TradFi people that come in and it's like, oh, what horrible thing to call out. It's like a dry age from Whole Foods ribeye, but it's like, it's not the point of like what the good is. It's the point of like, these are market forces because Whole Foods charges too much, they go out of business. Like this is just economic coordination, and the price reflecting that. And so if they can't, this is what they have to charge. And you could pick any basket or any like unit and you would see a very similar, you might even see it worse. So anyway, it's just the indoctrination around this stuff is really interesting, where people see it in front of them and they can't actually admit that inflation is completely out of control and you're losing purchasing power every year if you're not holding a harder form of money.
Yep. Well said.
Yeah. Buco capital.
Yeah. And eating less quality meat is, or just less quality food in general, don't just eat processed foods instead, just because the price of your meat is going up.
The basket is always changing.
Good stuff, guys.
All right, boys. Yeah, good rep. Thanks for joining us, everyone. See you next week.
Later, guys.
Hey, everyone. Hope you're enjoying the show. It was a great discussion, touching on all things that happened over the weekend and coming up this week in the Bitcoin digital asset space. Just wanted to quickly remind everyone that Onramp, while we have multi-institution custody, which brings peace of mind to Bitcoin holders from early adopters that have built a material stack and are looking for peace of mind for their existing solution, how do they plan for inheritance, and all things related to financial services, all the way to net new entrants that are looking to build a material position but don't want to deal with cryptographic material, plastic devices. How do they secure it on a third-party exchange? We support them in different formats, whether it's Onramp Standard, where they can onboard as low as $150 a month, to our private product offering that comes with a whole slew of benefits. And one of them is the Guild and our private investment network. We've seen a lot of demand for that recently. We talk with individuals across the world, frankly, And there's a common theme coming across that there's business professionals that have either built a position or starting to, a material one, and they ultimately want to get access to private equity in the space. They want access to the best minds in the space, and they're trying to figure out what's their next move, whether co-founding, operating a business, or just getting a seat at the table from an advisory perspective. If you're interested in any of those things, I would encourage you to reach out. Michael at onrampbitcoin.com. And again, if you may not necessarily want to talk to anybody, but you feel comfortable with our solution, you're ready to go, you can go to onrampbitcoin.com and go through our self-service process. I hope you enjoy the rest of the show.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.